this is where we're headed in terms of an uptrend.
Watch Yorba.tv with Michael Yorba.
Right now we still have a liquidity crunch.
A new network for the serious investor.
Indicators have to complement each other.
Yorba.tv.
There's good news on the horizon.
Cutting edge information from the trading floor.
Commodities markets are pretty much in a frenzy.
Live on the web at the closing bell.
Record high in crude today.
Weekdays 3 to 4 p.m. Central on Yorba.tv.
The risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
Welcome to Commodity Classics. Thanks for joining us. I'm Michael Yorba, your host. My first guest today is James Kelly, and what we're going to be doing is going through, in the first part of the half an hour that he's on our show, the newsletter that he wrote. It's quite controversial, which I really appreciate. In the second half, we're going to go through his charts and his market forecast. Come on in, James. How's the weather up there in beautiful British Columbia?
Hey, we're having a mighty fine day. The weather's been generally warming up here, feeling a bit more like summer. How about down in Texas?
Oh, it's raining cats and dogs right now. We're kind of wondering if we're going to get another hurricane through here. But that's all right. I made it in. All right, you've got a really interesting newsletter, 28 pages. It's a lot of content. You really, really did a lot of work on this. I mean, I was amazed at your candor. Not that I was shocked by it, because that's kind of your forte. But this first part, do you mind if I ask you a few questions about it?
Yeah, no, by all means, shoot. Hit me with your best shot.
Okay. The first part's governments have jointly decided in complete secrecy from the public, as in most cases, that financial markets are included in their national security policy. Let's elaborate a little bit on that, because there's a lot of people who have been wondering about the same thing you put into writing here.
Yeah, you know, it's, well, of course, the Federal Treasury Reserve, or Mr. Paulson, you know, your Secretary Treasurer there, would probably say the Feds are adding liquidity to the market. The truth is the U.S. government has been manipulating the stock market for a long time. This is not new. Now, I use the word manipulation to get people's attention. They would say that they've given it a helping hand. And, you know, this has been written up. This is not actually new. It's actually one of the most controversial subjects. And it's not happening just by any means in the U.S. It was acknowledged in Japan several years ago. I mean, let's face it, money is important. It is a national security issue. And when the markets basically need a helping hand, that is somewhat the job of government. How far should they go is really the question. Where should they draw a line? The new words being used by Bernanke himself these days is, at what point does it become a moral hazard? For instance, was bailing out Bear Stearns an ethical or an unprecedented thing to do? Is it wrong? The best document I can refer your readers to, and it is available free from KRTT, it was written by Sprott Asset Management up here in Canada, which manages billions of dollars, incredibly good reputation. And they wrote a document that became public a number of years ago called Move Over Adam Smith, The Helping Hand of Uncle Sam. And it was really... it focused a lot on the U.S. government manipulating their stock markets. Now, that's been admitted right back to the days of Ronald Reagan, this whole idea of, you know, should we allow a stock market crash or should the government intervene? This came out of times such as the 1987 crash. You know, were computers responsible? What checks and balances should be put in the system? We have had a tremendous amount of intervention since this credit crisis here, what we call subprime meltdown. and it has been no doubt unprecedented in world history. So you might say that the equity markets have been propped up on, even moral suasion, such things as dovish speeches by Bernanke and Paulson. But it's happening up here in Canada at probably even a greater unprecedented. I know your American audience is not familiar with the Canadian situation. But, it could also be called a con job, because I'm of the opinion that investors and traders need to know the truth, and we really should have all the facts as they are. And, for instance, even our inflation data is completely manipulated and false. And so when you put out this type of data to consumers, they tend to use it. They make decisions off it, and if it's falsified or it's incorrect or it's deception, then it's very, very dangerous. And I also mentioned in that newsletter, for instance, one of the world's largest bond managers, Bill Gross from PIMCO, basically in his monthly research this month, he basically called the U.S. government a liar on inflation data. Our inflation data up here in Canada, they're currently telling us that it's as low as 1.25%. Well, we know that that's just smoke and mirrors. So there is a lot of intervention. There is a lot of manipulation of what we're being told. And if, for instance, you study economics, you will find out that, even the great John Maynard Keynes in The General Theory wrote that economics can be misused. The dark side of economics is that once you realize that you can manipulate people's confidence by falsifying information or by telling them things are okay when they're not okay, you can really dangerously manipulate people. And it's a little bit like TV advertising. It's no different than why they spend $1 billion on Super Bowl ads. The public is gullible. We do tend to believe what we are told by the media, and this can be extremely dangerous. So to be a good investor or a good trader, you need to dig beneath the surface. And, of course, that's what I get paid to do, and that's why I publish that type of information for my subscribers.
Right. Now, you've got some interesting things here. It says, as we've related in the past, this deliberate central bank action could even be classified as treason, the crime of serious act of disloyalty to a sovereign nation. So basically what I'm getting from the first couple of pages, and I want to get deeper into your letter, is that you're feeling that the central banks are actually working against the general public when it comes to their policies, to the point where it's so self-serving it's actually treasonous. Is that correct?
Well, of course, the treason's a tough word, and of course what I'm referring to there is the devaluation, the constant devaluation of the monetary unit. This is not just my view. This is the view of other people, including, the presidential candidate Ron Paul that you have right there in Texas. The U.S. Fed has basically not protected the U.S. dollar. Now, when you fail to protect your monetary unit in a country, that is an incredibly serious breach of duty. The government has a fiduciary duty. If you destroy your currency, you will technically destroy the wealth of your nation. And so when you take a look at the tremendous devaluation policy of the Fed to allow the U.S. dollar to constantly drop, this is, of course, a very serious breach of duty, in my opinion. And that's what I mean, by the word treason. Is it treason to constantly not pay attention to the value of the U.S. dollar? And, just based in the last few years, the U.S. dollar has fallen by about 50% versus the euro, probably 30% on the average world currency. Now, the Feds could have done a lot about that. They could have raised interest rates. They could have done a lot of things. They haven't. They've deliberately ignored the U.S. dollar. So when we have $130 oil prices, when we have $1,000 of gold, this is only to be expected. If you constantly devalue the U.S. dollar, you're going to appreciate or inflate the cost or create a bubble in everything else. So, yeah, it's a very serious breach of duty. And, of course, economists call this lean against the wind. And basically, in good times, the job of a central bank is to tighten monetary supply. Yet if you look at the history of Canada, the U.S., the U.K., they've really deregulated. The central banks have largely thrown away monetary aggregates. I mean, they've opened the credit window. Look at the U.S. Fed since the subprime meltdown. Literally, the credit window of the Fed has been thrown wide open at the taxpayer's expense. So this, of course, has the effect of devaluing the currency. Now, I say,
Jim,
and KRTT certainly believes.
Go ahead.
Go ahead, Michael.
Go ahead. I want to hear this last part.
The most important aspect is the monetary unit. You can talk money supply to me, you can talk interest rates, you can talk inflation, but please tell me if you know of something that's more important than your monetary unit, because if you don't protect it, you'll eventually become a banana republic, and we all know this is true. So the question that needs to be asked by our audiences is why have federal, central banks, and in Canada too, why have they not protected the monetary unit?
Right. Now, speaking of questions by the audience, I've got a couple for you. First one, Ozzy Pete, one of our, and by the way, just to let you know, we don't just have viewers in the United States. We've got, several thousand viewers in Canada. We're all over the globe. We're actually in over 70 countries. So your conversations right now that we're having are going around the world, and there's a lot of different countries watching us every day. I know. I look at the numbers every morning and find out what new countries showed up today. But let me get to these questions here on the shout box for you. Ozzy Pete, one of our viewers from Australia. So do you see a crash coming based on what you were just saying?
Clearly, I think there's been a tremendous con job, and what I mean by that is the deception levels here of the reality of the economic scenario here is unprecedented. I think the public basically are not being told the what I would call the bitter truth. For instance, just in the U.S., and the U.S. Of course is what I call a very important nation, the most important economy in the world. So what happens in the U.S. is very, very important to Canada. You know, you're our greatest ally, our greatest trading partner, and we should be very concerned as Canadians about the situation in the U.S. But for right now, I think, for instance, the entire economy is being hung on the single hat of the consumer. You know, we keep on relying for the consumer to bail out the economy. But the truth in the States is we have a terrible housing situation. We have a very tough credit market. The Fed stimulation at this point is basically no more. There's not much the Fed can do from here. We have huge oil prices, which is a drag on the economy, and everything gets transported, so that's highly inflationary. We have an election uncertainty coming up in the States, and clearly there's a lot of problems. The S&P, our first chart in the next session, you know, it's a fairly expensive index, and we could see PEs collapse, we could see earnings go down. So yeah, there's a lot of risk in this market, and the public need to be told that so that they can, manage their portfolios wisely. Otherwise, they could lose a heck of a lot of money in the next, few months.
Simply put, I'm going to take that as a yes. Just kidding.
Yes.
Just kidding. All right, the second question I've got here. It says, so when do you think people will reach the point where they can't accept government lies anymore?
Well, I think that's already happened, frankly, and I think for an astute person, I mean, this goes back into the newsletter using a little bit of basic analogy. Many of the readers here, certainly in North America and worldwide, I, as a boy in my bedroom, used to read the Hardy Boys. I mean, girls used to read Nancy Drew. An investor must be a forensic detective. We need to look at the data, and we need to question it. And if you are gullible and if you're naive, well, you're going to make some very poor investment decisions. So, no, we can't. I mean, and I think this is Bill Gross's argument at PIMCO, and here you have one of the largest bond managers in the world basically saying inflation data is completely corrupt in the U.S., the U.K., and Canada. And, of course, Japan started this game many, many years ago of, inflating the money supply. Now, in Australia today, one of your last readers there, I mean, they know Australia is a much more transparent and honest country right now. Their interest rates in Australia today are 7.25, and they're talking about inflation is 7%. Now, it's interesting because that's exactly what Bill Gross says inflation really is. It's the same up here in Canada. I mean, I go to the stores, and so it's fascinating to be told here in Canada that our inflation rate by media reports is 1.2%. That's a deliberate lie, and it's a deliberate manipulation of the truth.
Right, I agree with you. Now, on the note of that, you said here, and it says that you've got some very elaborate financial software made for you or made available to you by a famous financial software creator that talks about the underlyings of the market, that it's being manipulated to the point where it actually should react to the downside as hard as it reacts to the upside. You're not seeing that going on.
Well, that's right.
Go on.
That's correct. We have, statistical evidence, and of course, statistics is nothing more than math. And technically speaking, when you have, for instance, a statistical indicator that's worked, say, 70, 80, or 90% of the time, and it doesn't work all of a sudden, well, one has to suspect that there's manipulation in the market, there's intervention, there's strange things happening. And, for instance, even up here in the newsletter, you'll notice that the Toronto Stock Exchange gapped open just in 2 days. I mean, the difference between the overnight close and the next morning was 250 points up. You know, in the old days, when I was a broker 20 years ago, I mean, you know, you had a market maker really needed to justify a gap. There had to be big news overnight. There had to be huge order imbalances, really abnormal balance of the volume, and yet today they seem to be able to gap stocks up. So gapping is one of the ways that they can manipulate the market. Down in the States, it's probably more sophisticated than done in the futures market. And again, I would encourage anybody that wants a copy of some of the documents to talk about this, such as Move Over Adam Smith or the recent Bear Stearns manipulation that's been talked about, send me an email to jk@krtt.com and I'll send it off. It's available for free of charge.
Good. We're going to have to end this segment there, and on the other side, ladies and gentlemen, we'll get deeper into the charts and the forecast to James Kelly. James, thanks much. Stick around. We'll be right back after these messages.